Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar, a third consecutive indecisive spinning top on Friday as the market continues to get squished on a closing basis in between the flatlining overhead long moving average, currently at 108.27, highlighted in gold on my daily chart, and the mauve colored, very slowly rising medium moving average below, currently 108.1616. Further up, we have the 50% Fibonacci line for 2023 at 108.64, and the green colored flatlining short medium moving average, currently 108.85. It was also a second consecutive close up over the small mid-January to late February bearish expanding wedge pattern, currently 105.74 to 108.02. For the moment, I've still kept highlighted in green the October 2023 to late January 2024 broken bull channel, as I'm still wondering if the market will trawl along on the underside of the lower bull channel line, currently at 109.29. Now looking below, we have the May 2020 low at 107.66 and the more interesting April 2020 low at 107.25. But I still think the next support of note is the 2020 low at 106.36. It was a little premature, but I laid out last time some possible targets below for the move lower from the broken bull channel. Thus, a primary target X is in a 106 zone with a secondary hard to reach target X1 in a 104.5 zone. I am now considering whether I should retire them or not, as there has not been enough progress in that direction. So far today, further indecision, but then a move back up over the long moving average and up towards that 50% Fibonacci line at 108.64. Cable, aka sterling against the US dollar. A fourth bullish white soldier on Friday and a continued suitable follow-on higher to early last week's bullish engulfing pattern. This time the market seemingly fully established itself back within the broken November to December 2023 shallowy bullish shift pitchfork over the highlighted in dark blue lower time, currently at 126.51. It was also the first close back up over the flatlining short medium moving average, currently 126.75, and the September 2020 low at 126.72, well, both of those since late January. It may be premature, but in the light of all these, I have decided to retire target X down at 123.5, the target for the break below the bullish shift pitchfork. I'll retire this now, after today's commentary. It also questions the idea I've been recently toying with as to whether the November 2023 today action may be a possible rounded top pattern. Overhead, the next resistance is the 50% Fibonacci line of the June 2016 to September 2022 move at 126.19. It's quite a large piece of move there. And then the general December 2023 to January 2024 congestion, which is up to the middle time, currently at 127.81. Now so far today, a seeming basing action is being built on the lower time to tackle overhead the September 2020 low, the short medium moving average, which has done both of those, and the 50% Fibonacci line now at 126.99. Euro sterling. A second bearish black crow on Friday and a more than suitable follow-on low to the previous session's key reversal down and bearish closing black Maribosa. Prices are still being attracted to the December 2022 low at 85.45, but Friday did see a close below the dark blue highlighted middle time, currently 85.39, on November to December 2023 bearish shift pitchfork. However, we are also still within the breached but unbroken small purple highlighted gently rising late January 2024 to date expanding wedge pattern, which obviously tempers the bearishness a little. Further down we have the bright red neckline of the May to August 2022 head and shoulders continuation pattern. Now this had successfully held up prices in mid-February. Whilst overhead we have the 3 descending moving averages, the nearest being short medium moving average, currently 85, 86. Now so far today a reactionary move back up over the middle time and the December 2020 low, and just over last Friday's high, but not really pushing much higher than that at the moment. US dollar against the Japanese yen. An indecisive doji cross on Friday. It was nevertheless quite a high close, though with obvious indecision at such heights. Overall, we are settled within 2 major pitchfork patterns. We have the February 2022 to January 2023 bullish shift pitchfork, which is highlighted in purple on my daily chart. We are in between the lower time below, currently 143.33, and the middle time above, currently 157.31. We are additionally very close to the middle time above, currently at 151.15, of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. Well, so far today, well, not much, looking like another indecisive spinning top pattern right now, potentially. US dollar against the CNH, the offshore Chinese yuan. An indecisive spinning top on Friday, after the 2 previous sessions were indecisive doji crosses. The top side was capped by the slowly declining medium moving average, currently 721.11, whilst the downside was supported by the May 2020 high at 719.64. Further above we have the slowly rising long moving average, currently at 722.11. Further below we have the almost flatlining short medium moving average, currently 718 even. So, not much to say really. I would only add that we have an unusual situation in the Chinese yuan, not because of the lack of movement, but that last week we had a weekly key reversal up in the US dollar CNY, the onshore Chinese yuan, and at the same time a weekly key reversal down in the US dollar CNY, the onshore Chinese yuan again, but this year this time now the 1 year NDF. Seemingly we're undergoing some changes in the curve here. Well, so far today, not capped, not much, capped by the medium moving average, with the May 2020 high as support below once again. US dollar against the Mexican peso. An indecisive spinning top on Friday as the market sat for the first time with an open and close over the March 2016 low at 1709.23 for about a week and a half. There is further support from the declining short medium moving average, currently at 1706.71, and the April 2016 low at 1703.89. But the best support is the dark blue highlighted middle time, currently 1694.64 of the December to January mildly bearish shift pitchfork. This pitchfork also accounts for the best overhead resistance with the upper time above, currently at 1728.47, with the adjacent declining long moving average currently at 1725.38 and the medium moving average currently 1731.30, providing additional reinforcements. Now one could argue the market is utilizing the middle time, the middle and the upper times, as a de facto bear channel, and that's an interesting proposition. So far today, well, an open on the March low, March 2016 low, but staying above it and within Friday's range.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.